Well, thanks for joining us here on a Tuesday. I'm Marlon Bowling with you, and we've been watching our grain trade today in the wake of USDA's latest harvest progress numbers, and I believe we have those national numbers for you that we can share with you. As far as the corn harvest goes, they were a little bit behind where they were expected to be. The trade was looking for corn harvest activity of 40 to 47%. Well, it came out at 38%, well behind the 5-year average of 59%. Soybeans were 70% done, though, and that was higher than expected. The 5-year average, 73%, so they caught up and got pretty close to that. Cotton ahead of schedule at 37% complete. Want to bring in Brian Hoops. He's the president of Midwest Market Solutions, and get his thoughts on what's going on in the trade today. Brian joins us right now from Springfield, Missouri. All right, Brian, thanks for joining us here today. Let's talk about the grain market activity here. And I want to get your thoughts on the corn market. We were sharply higher yesterday in a bit of a turnaround there, I guess a big-time turnaround, kind of easing back a little bit today. But all in all, some analysts are telling me, hey, it's kind of holding its own. So they think the bullishness was actually something that would be more valid now. What do you think?
Yeah, we came into the week testing that downturn support area right around 344, and that area was supportive enough that we were able to hold and rally off of. And so as long as we continue to hover above that area, I think you have to believe that the lows are in for the time being. The harvest progress was a little behind the normal pace, a little bit behind expectations, but that was because producers were so active in the soybean fields last week. They were very aggressive trying to get those products out, and we came in above expectations there. So there's been a little bit of switching from the soybean harvest back to corn with the wet weather. But again, once weather dries up and temperatures warm up a little bit, we'll go right back to soybeans, try and get that crop out, and then turn our attention to the corn harvest.
Interestingly, I heard from one analyst, I think it was late last week, I believe, they said there was a lot of corn piled on the ground, but they said they were amazed at how many soybeans were piled on the ground this year. That's kind of a risky thing in most cases, right?
Yeah, you don't want to leave those soybeans out there very long. You can kind of get away with it with corn, but the expectations are that it's a temporary thing for the soybeans. They're going to be quickly put into the pipeline. And, there's enough demand. We're exporting less soybeans than a year ago, but there's still enough demand that we shouldn't have any beans out on the ground outside of commercial storage units.
All right, let's take a look at our prices right now, Brian. On the corn market first, let's bring it up here and look at December. Still just one tick lower at 351. And we have July a half-cent lower at 380.5 per bushel. And if we look at the soybean trade, we've had a little weakness all morning long. It's still maintaining about a 4-cent loss here. We have January down 4.5 cents at 986.5 per bushel. July down 4.5 at 1014.25. Moving on to the wheat trade. Now in Chicago, first of all, we have December a half-cent higher at 437.25. It's come off of its low now by about 4 cents. In Kansas City wheat, you have your December contract there trading at 433.5. It's back to unchanged again, so it's off its low by about 3 cents now. On the Minneapolis spring wheat trade, it has been trading firmer than the other two exchanges. It still is. We have December up 2 3/4 at 617 3/4 right now. Cotton market, by the way, we have December there now trading 1 point lower at 69.71. The other months are starting to firm up a little bit now, so it has bounced off of its earlier low by about 70 points now. Brian, I want to bring you back here in just a little bit and get your thoughts on the livestock trade, but also what's going on in the outside markets. Man, lots of attention being given to this Dow Jones Industrial Average and what's going on with the dollar and crude oil as well. We'll talk about that when we come back right after this. We are talking right now with Brian Hoops. He is with Midwest Market Solutions, and he's based in Springfield, Missouri. And we're talking about the grain markets, the outside markets, and lots of commotion going on in the Dow Jones Industrial Average here this morning. Brian, a big-time surge right out of the gate this morning. What's going on?
Yeah, this market's continuing to push higher all summer long. It seems like some of the bears were in there trying to pick a top in this market, and it's really defied everybody, continuing to push higher. The market is anticipating we're going to see some tax cuts, and there's talk this morning about those tax cuts coming before Thanksgiving, and so that's really fueled the market here to some moves higher on the day. We're up a very strong amount in the S&P and the Dow, and it's related to, I believe, the tax cut talk that's going around the trade floor this morning.
And the dollar value has been fairly flat, but the crude oil a little bit firmer here this morning. Are they connected?
Yeah, you look at the dollar just on a daily basis here, it's not doing very much, but overall, we're starting to build an uptrending market. We've got higher highs and lower highs. So we're just moving this market a little bit higher very slowly. And that is a negative, especially for the wheat market. We are really right now 100% dependent upon exports. And as that US dollar marches higher, it makes our products appear more expensive. And we're already losing out on Egyptian business and a lot of European business. So it's something we can ill afford to lose out on, and that's exactly what has been taking place here over the last several months.
Okay, cattle on feed report came out Friday afternoon. Placements number way higher than expected. The market immediately tanked yesterday morning on the cattle complex. But then before we closed yesterday, the market actually came back and we had quite a few plus signs in the market. Now today we opened up with moderate gains, but then it took off and went running higher about half an hour into the trade. Let's look at where we are right now. And can't wait to get your thoughts on this one. Let's look at live cattle here first. Currently, December up $1.70 at 118.45, and that is now off of its earlier low by nearly $2. February up $1.67 at 123.25 per hundredweight. On the feeder cattle side, we had some wide swings here in feeders. November up $2.60 now at 155.32. We had a low of 152.65 and a high of 156.18. It's a huge swing there. January now up 307 at 153.95. What does that do to our technical picture on the cattle today?
Well, the charts are kind of a mess. Feeder cattle opened lower yesterday and then started to rally. We've had about a $6 rally off of our lows just yesterday to today's highs. So 24-hour span, a big swing in those feeder cattle. And cattle, especially the feeders, had opened at new lows yesterday and really did not uncover much selling interest. A lot of times when you push to new lows or new highs, you'll find a lot of selling or a lot of buying interest. That didn't take place, and then we started to see some big short covering. Right now, the funds are entrenched in the long side in this cattle market until the trend of live cattle break, where we're into a downtrending market. The funds look to be kind of in control. They want to buy the dips, such as we saw yesterday morning when we saw weakness from the cattle on feed report. And so far, they've been rewarded on doing that exact thing.
Okay, lean hog trade today. I want to get your thoughts on that as well. Let's pull up our futures here in Chicago. And on the lean hog market, we're 13 higher on December at 63.65 per hundredweight, about 20 cents from our high of the day now. February up 3, and we have April up 17 at 72.82. So the markets have had fairly wide swings, but getting a little firmer once again today. But what do you think the odds are they can take out that 65.32 high that they posted?
Well, they're getting a lot of support from the cattle market, but this market has been a real strong uptrending market as well. Yesterday, we had a bearish reversal day, meaning we took out the previous day's highs and the lows and closed lower. That was the third time this month of October alone that we've done that, but the previous two times we've come back within a couple of days and negated that bearish technical action. So we're going to look for this hog market to go back up, test those highs once again. If we're able to, we're just going to keep right on moving higher. And if we fail at that resistance or fail to take out that high, we would look for quite a bit of selling to start to take place in this market because there is resistance right above that old high.
Okay, that'll be very key to watch. Thanks for pointing that out. I appreciate that. Well, Brian, good to visit with you again. Brian Hoops is with Midwest Market Solutions, and he is based in Springfield, Missouri. So, Christina, lots to watch today.
I know.
Not a boring day at all.
I think I can hear it in your voice today.
Man, oh,
You like
man.
all this excitement.
Well, traders like it too, don't they?
Yeah, it's interesting. The financial markets, we have a lot to watch for today.
Absolutely.
Thank you so much, Markets Editor Marlon Bowling.